his name in business as a deal maker. His deals and initiatives, they're shaking up the investment world. From IPOs to private equity to mergers and acquisitions, the world is adapting to a rapidly changing financial landscape. Here to walk us through what to expect is Peter Chun. He is founder and managing partner at Silverbear Capital. Peter, thank you for joining us.
Thank you.
Why don't you begin by telling us a little bit about what you do and what your firm does?
Very good. Well, Silverbear is a standard investment banking shop, I would say, headquarters in Hong Kong. We adapted a standard partnership system just like everybody else on Wall Street. We got 45 partners right now in the firm, 200 people carrying our cards worldwide. We do from IPO to M&As all day long, leverage buyouts, simple advisories, buy side, sell side, all the standard stuff that you'll probably find in a typical shop.
Okay, as an investment insider, what are you seeing with Trump right now, President Trump?
Well, actually, everybody was looking forward to his presidencies because he made so much commitments, and everybody is looking forward to see if he can actually fulfill those commitments.
Yeah, and he's been openly antagonistic against China, calling them a currency manipulator, also calling for a new tax. What do you think? What is the response in China to all of this?
Well, I think China wanted to reterm the terminology from manipulation to intervention, which is the standard terminology. Mm-hmm. So I think the China government is doing everything it can to protect its currency from going down.
Right. They're spending a lot of money to defend their currency, not necessarily manipulate it the other way, as you might be saying.
Absolutely. The Chinese dollars are fleeing away from China, and they're doing everything to stop it.
Now, what about the border tax? If implemented as Trump says it's going to be, and there is doubt about that, maybe it's just a negotiating ploy, what would that do to the Chinese economy?
Well, the border tax, it probably will hit a good ratio of the China economy because, as you or we have understood, for the last 20, 30 years, China have lived happily among the manufacturing industrial economy that they have put together with the populations. And putting a heavy border tax means hurting a lot of the exports that China is making, meaning less exports, more imports, negative balance sheets for China.
So what's the ideal outcome for China here?
Well, first of all, China is yet to seek the truth to this border tax issues or policies that yet to be implemented because there is a lot of hurdles for President Trump to put this all together, to be honest. Secondly, there's also a lot of contingency which China had already made with their fellow allied countries, for example, Cambodia, Vietnam, Mongolia, where these countries are still friendly with the U.S. While they allowed China investments to go into those territories and set up shops there.
So would you see some of these alliances dissolve potentially?
Probably not, because then it means a global anger rather than just in between China and U.S.
Yeah, that makes sense. Thank you, Peter, for joining us. We've been talking Trump, China, the markets. If you have something you'd like to add, leave a comment below or message us on Facebook or Twitter.